looking for a 15-minute opening range breakout. Now, here was my initial thoughts, right? I was looking for price. I wanted to short here, right? So my initial thesis was this, right? So if we just mark out the first 5 minutes like this, right? So I used to trade the 5-minute opening range breakout. I stopped trading the 5-minute opening range breakout purely because I thought the 15-minute one was a bit more accurate, and I'll explain why. I'll explain why. So let's kind of dive into these candles. So from here, I was happy to go short just over here. So what I look for is a break and retest. For those traders who know how I trade break and retest, right? Off my key levels with opening range breakout. So from here, we've had a break, right? Here's our retest, right? Now, our retest, if we can get below this line here, then I'm happy to go short, right? And so from an order flow perspective, I took a screenshot of this as well. So from an order flow perspective, this is what we saw, right? So no, sorry, these were the executions. So yeah. So from here, the reason I wasn't comfortable going short here was because we had a fair value gap here within the 15-minute range on the 1-minute time frame, right? So whenever I see 1-minute fair value gaps inside my zone, there is a high likelihood chance that we could fill this area, and that's exactly what happened today. Now, with that being said, just wait for the first 15 minutes, right? Just wait for the first 15 minutes. So now we have our first 15 minutes over here. So this is the 15-minute opening range breakout strategy, all right? This is the first 15 minutes, right? So 9:30 to 9:45, right? We are looking at this specific area. Now, from here, trading does become a lot more simple. So we have the 15-minute range high and we have the 15-minute range low, just like this, high and low. So again, we don't neglect our level. So we have massive supply over here. So just in case you forgot, right? Key level one we had a huge supply, right? So the previous week, Tuesday, 3rd of February, we held a supply post FOMC. Post FOMC, we held a supply. So what that means is, right? I have studied this level from the past. So I know for a fact, right, based off this reaction and this reaction, when we get here, I don't want to be holding longs, being hopeful, right? Praying that the market's going to go higher, right? That is greed, but in reality, what's going on is you don't understand where key levels are. So if you don't understand where key levels are, then you can't blame greed or psychology or FOMO or any of these psychological fallacies, right? Psychology is a fallacy if you don't know where your levels are, right? That's the saying I have in my head, at least, or in my community, right? If you're missing a technical piece of information, right, psychology is never going to help you. So if we have our key level over here, this is a key level of supply. This was also a key level over here. Now, why was 2 a key level? So the reason 2 was a key level was the same reason for 1. So what we had over here, if I break this down, so notice how if you have a 15-minute fair value gap that has given you a reaction, you need to remember that zone